Some historic gains in the market right now, but should investors still be cautious during this market frenzy? Joining us today is Wall Street veteran Marc Chaikin with Chaikin Analytics. Marc, I am so excited to have you on the show, especially today during these huge market jumps we're seeing. I know you're going to help walk investors through what to do right now because it can be a little scary and exciting at the same time. A lot of investors wondering, what do I do when these stocks are jumping so quickly? Is this rally real and going to last a long time? Could the pullback still be there in the background? Is there still risk right now? We're going to cover all of that in this interview today. Plus, Marc is going to share a couple of sectors he would suggest taking profits from right now during this rally, and 7 specific stock tickers that he's bullish on for even further rally in the future. So first off, just from your experience, how historic is the jump that we've seen in the market this last couple of weeks?
Well, I think if we look at the triple Qs, the Nasdaq 100 index, you had 10 straight days up heading into today's opening and a 13.9% gain. That's historic. It's the biggest gain in a 10-day streak in over 30 years, perhaps ever. And I've been very cautious on the market, bearish as we were heading into that V-shaped bottom just, 2.5 weeks ago. And you got to listen to the market. The market is telling us something. It was last Wednesday when the announcement of peace negotiations, ceasefire negotiations over what is now the previous weekend, pushed the S&P 500 through its 50-day average, its 200-day average, broke through all resistance levels. And guess what? We're banging up against new all-time highs here. But I think that there's a lot of hopium in the market, and markets that go up on hopium are vulnerable to the slightest disappointment.
Yeah, that's a great way to describe what is happening in the market right now. It just seems like investors are really ready for another bull run. They're excited about the end of the downward spiral the market has seen since the start of the Iran war. But I'm curious, what can happen when you see such a huge run up in such a short time frame?
For me, the key thing right now is the Strait of Hormuz is still closed. So a month ago, when I wrote my monthly market insights in March, I said that 2 things would change my bearish outlook. One would be a ceasefire, and the second would be opening the Strait of Hormuz. Well, neither of those are really in place right now. There's no agreed upon points for a ceasefire, and the Strait of Hormuz is clearly closed. So I think investors have to be a little bit restrained and not get caught up in this enthusiasm about, wow, they went to new highs and everybody was bearish, I better jump on board.
Yeah, that fear of missing out can be so dangerous for investors. Such good advice today, Marc, and a good caution for people to keep in mind. I know when you are looking at which stocks to be bearish or bullish on right now, you are always looking at the power gauge. This is the system that you built to help quickly analyze stocks based on dozens of key metrics. You can follow along with a free trial of what this power gauge report looks like by following this QR code or clicking the link in the description. You'll get free access to the power gauge report on 3 popular stocks in the market today, so you can have a better idea of what we're talking about today. So Marc, let's get into some of those bullish sectors right now. These are the stocks you normally recommend buying, but some of these names have gone up over 50% in just 5 days or so. What do you do as an investor when the strong stocks have run up this much?
You exercise a little bit of discipline and you don't try and jump on a moving train. Let's put it this way. If there was no war in the Middle East, if there was no blockage of fertilizer and natural gas and crude oil, I'd be wildly bullish here. The market is telling us something, but the reality is there are still some major risks ahead. And so in terms of the strongest industry groups, and we talked about that in our monthly market insights, air freight, logistics, so FedEx, UPS, and also the Chinese company Zito Express, the energy complex, particularly energy equipment and services, so a company that supplies drillers, and metals and mining. So there are a lot of sectors and industry groups, the construction and engineering group, semiconductor group, but investors have to be patient here. Bridget, you talked about the power gauge being able to determine which stocks are attractive and which stocks are bearish. And I think that's something that this recent rally has created an opportunity, the opportunity for people to prune the weak stocks out of their portfolio. And 2 sectors come to mind: software stocks and cybersecurity stocks. And both those sectors have been negatively impacted by developments in AI announced by, in one case, Google, who announced 2 weeks ago a software process for speeding up chips, and the whole Anthropic open AI ChatGPT complex, which is putting a lot of pressure on SaaS software stocks like Salesforce.com and even Adobe. So I think you've had enough of a rally in many of these software stocks and cybersecurity stocks like Palo Alto Networks with bearish power gauge ratings, that this is a wonderful time with the market up at new all-time highs in the S&P to prune the losers out of your portfolio. These are stocks that a lot of people have owned for years. Software used to be 16% of the S&P 500. It's now only 8%. There's been a big hit in the software space, and people tend to be slow to recognize these shifts, but this shift is real. Wall Street analysts who follow these stocks are starting to talk about it. And that means that there's going to be more selling pressure over the next 3 to 6 months in these software stocks.
Well, this is my favorite thing about our channel, is that we get to talk to a lot of different analysts, a lot of different people with different theories on investing. And just yesterday, we had someone on who was very bullish on the software recovery, saying that the rebound is just getting started and that these stocks should be set to make a recovery over the next few weeks and months ahead. And I love hearing a completely different take on what's happening in software right now. I want you to dive into it a little bit more, Marc. Why are you on the side of sell software after this jump? This long-term is maybe not the right trend. Why do you think that this doesn't have a long-term recovery outlook?
Well, for me, it always starts with the power gauge rating, and the power gauge rating on so many of these names, from Adalasian symbol TEAM, TEAM, to Zscaler, to Salesforce.com, are bearish. And that means that the 20 factors in the power gauge that all get into the mix and uniquely weighted are telling you a very negative story. Then I look at the technicals. How are these stocks doing relative to the market? And software stocks have been underperforming the market for over 9 months, Bridget. And finally, I look at Chaikin money flow to see what the smart money is doing. And the smart money continues to sell these stocks. And the reason is clear. This isn't just sort of some piling on situation. The advances in AI from Anthropic, from ChatGPT, from Google, from Meta are a big threat to the SaaS stocks. These stocks have always been sort of, they're almost like the quarterback on the football team in high school. They had a nice aura about them. Everybody wanted to be around them. Everybody wanted to own them. And we've all made a lot of money in software stocks.
Right.
But the bloom is off the rose here because the advances in AI, the ability of Claude from Anthropic to actually write software on the fly, not just, test case software, but usable software, is just upending the software model that has worked for the last 25 years.
Yeah, speaking of the software model, I feel like this was all started by Microsoft. And I'd love to hear if you think that Microsoft is included in this bearish outlook on the future of software, or is Microsoft have a big enough company and footprint that they're not solely just that software company for you?
Well, that's a great question, and it's sort of ironic because Microsoft was one of the early backers of ChatGPT. Microsoft had a neutral rating in our model, but I think Microsoft is going to be challenged by the advances in AI. And I think all of the Magnificent Seven stocks in one way or another are going to be challenged by what's going on in AI. I think there's a whole new era. We've got a SpaceX IPO coming in June, probably around June 9th, which would be the anniversary of the first moon landing, believe it or not. And Elon Musk seems to have a penchant for historic, coincidences. There are going to be data centers in space. It's a whole new era of AI. But the legacy companies like Microsoft are going to be challenged. in my view. The stock's been in a downtrend, it's been underperforming the market since November. It's had a really nice rally here from under 360 to above 400. It's a pretty big rally for Microsoft. I'd be a seller of Microsoft here. It's got a neutral rating, doesn't have a bearish rating, but it's in a very steep downtrend. And with the market at new highs, guess what? Microsoft is over 20% below its peak just 6 months ago in October or 5 months ago. So I think the legacy companies that have taken the bull market to new highs on their shoulders, the Magnificent Seven, if you will, plus stocks like NVIDIA, are going to be challenged in this next wave of AI innovation.
Yeah, I want to get into those stocks that you are really bullish on today. And I know that you have 7 stock tickers that you are going to be sharing with our viewers in this video yet today. But first, I want to talk about one more bearish sector, and that's the cybersecurity sector that you mentioned. You mentioned Palo Alto. I'm curious here because there's been a case made, again, by some other guests we've had on the channel before, that as AI grows, as technology grows, the need for cybersecurity becomes even larger, that there's going to be more demand for cybersecurity, more investment in cybersecurity. We know that the Mythos has been making headlines about the cybersecurity issues and cracks in many of the nation's largest systems. And so this is a hot topic right now. And so I'm curious about your take on long term. Do you really think that cybersecurity isn't going to get the investment, or is cybersecurity going to look different than the companies we have today?
It's going to look different, Bridget. That's a really insightful point that you make. The legacy cybersecurity companies are going to be challenged by Mythos. OpenAI announced a version of ChatGPT that has some of the same groundbreaking capabilities that Mythos announced just a week ago. And the reason this is important is that you have legacy cybersecurity stocks like Palo Alto Network that have made everybody feel pretty comfortable that they were protected. But then Mythos went in and found flaws in legacy hosting platforms that Microsoft had and some of the e-commerce sites that nobody knew were there. And that's part of the reason that these stocks are under pressure, because if your business model is based on the fact that you've protected your clients and someone comes along and said, no, you didn't, there's some back doors into that system, into that hosting site, that's a problem. It's a credibility problem. And the sense is that in the case of Anthropic, Claude could build cybersecurity systems based on what it's learning by probing other sites and marginalize some of these existing companies. Now, I am not a technology analyst. So I take a look at the power gauge and the technicals. The case of Palo Alto Network, there's a clear-cut downtrend. It's been trying to rally here for the last 2 months, but without a great deal of success. We're looking at the watt in the power gauge. The power gauge tells us what to think, doesn't tell us why. But you can sort of piece together the why based on what's going on in the real world. And the why here is that OpenAI and Anthropic have created incredible software capabilities that are putting these legacy software and cybersecurity companies on the defensive.
It is absolutely changing the entire market, the entire economy. There are so many rapid changes happening. And I think that's why we are seeing so many rapid changes in the market as well, because these advancements have implications for so many different sectors. And of course, one of the biggest ones is semiconductors. This is why we're seeing so much investment in this area and so much growth here, is because AI is proving that it is world changing right now. And so there's tons of investment happening here. And this has been the hugest rebound that we've seen in the market in the last couple of weeks. Let's talk about, one, the advice that you gave early on here is these have run too much to really look at buying right now. But let's look at some of the names in the semiconductor space that you would put on a watch list or look for those pullbacks to enter in.
Well, it starts obviously with the chip makers, and NVIDIA, which people were pretty down on just a month and a half ago, is back above 200, which is great. I think you look past NVIDIA. NVIDIA is clearly the wheel, as they used to say on Wall Street in the semiconductor space. But you can broaden out now and look back at the semiconductor equipment manufacturers like Lam Research, which is back up into an uptrend and making new highs. again, on a pullback. So LRCX, very critical to manufacturing quality semiconductors. Another company that we absolutely love is Onto, symbol ONTO, and we've been recommending that over the last 2 or 3 months. Again, just rallied from 190 to 260. So you've got to buy the pullbacks. But Onto is critical to quality control in the semiconductor space, in the manufacturing process. So, and it's had a bullish rating since August when the stock has gone, it's gone from 100 to 260. But it's still a buy if it pulls back maybe 10% to its 21-day average. And that's, I think, the way people should play the semiconductor space. Identify 2 or 3 stocks that are doing unique things. In the case of Lam Research, critical to the manufacturing process. In the case of Onto, critical to quality control. And look for pullbacks.
Yeah, I know we keep referencing the power gauge and what it says about these stocks. Again, if you want to take a look at what that system looks like, you can try it out today for free. Scan the QR code or check the link in the description. You'll get to take a look at what the power gauge has to say about 3 popular stocks today and see the information for yourself so you can relate to what we're talking about a little bit more. All right, Mark, I want to talk about one more sector, and that is the manufacturing infrastructure sector a little bit. I think these are the builders, maybe related to that AI build out.
So you've got a whole area that we call construction and engineering that is involved with building both electric power plants and AI data centers. And these stocks have been the backbone of this whole AI build out. And so you've got 3 components basically of the AI build out. You have the construction of power plants. So there you want to look at a company called Quanta Services. The symbol is PWR. They've been in business forever, helping electric utilities build power plants, clearing the land and building the plants themselves. So that's a stock that I want to buy on a pullback. You've got the air conditioning and cooling companies that are critical to the data centers themselves. And there you're looking at a stock called Comfort Systems, symbol FIX. And then inside the data centers, you have to move information around. So the optical stocks have just been on fire. And we just recommended taking a very quick 15% profit in 2 weeks in a stock called Coherent, COHR, which is one of these, sort of move the molecules around faster companies. Ciena is also a company, symbol CIEN, in this space where it's critical to move data as quickly as possible, particularly in an environment where you need to keep things cool to move them around. And so Ciena is also a stock that I'd buy on a pullback. And finally, it's the actual silver that's so critical, or the fiber optic wiring and so forth. And there, our favorite stock is Freeport-McMoRan, symbol FCX, which has had a very nice run. It's the largest silver miner in the world. It's had a bullish power gauge rating going all the way back to last year, making a new all-time high after a significant pullback based on the start of the war in Iran. And they've got a big silver mine that's offline that's going to come back online in the fall. Absolutely critical to have silver in the whole infrastructure, internal wiring and movement of data. And so a whole diverse set of companies that are going to benefit from the continuing AI build out that's going to go on for the next 5 years in this country.
So many great names shared today, Mark. Thank you so much for your time and for sharing some incredible information with our viewers. If you want to hear a different take on software and some other names to look at, make sure to watch the video we just posted yesterday. This one has a completely different viewpoint if you want to just see what else is out there in the market.